Hi everyone, welcome back to Corporate Decoder, the place where we make sense of the confusing world of corporate filings while trying not to spill our coffee trying to understand them. So Stran Company Inc., a company you might know from their stock trading under the ticker SWAG, has just dropped a report that tells us about a pretty interesting internal deal. We're going to break down what it means for the company and for its shareholders. And hey, if you're digging these super straightforward company breakdowns, make sure you're subscribed and ring that notification bell. Also, we've got a fantastic community over on Discord, linked in the description below, where we chat more about these filings and all things markets. Alright, let's dive into this. What we have here is a Form 8K, which is basically a report for really important news that happens between the regular financial reports. And the big news for Stran Company Inc. on August 28, 2025 is about a stock purchase agreement. So what exactly happened? Well, Stran Company Inc. decided to buy back some of its own stock. Not just any stock, but stock held by the company's very own president and CEO, Andrew Shape. They bought back 107 shares of common stock for 1.47 thousand twin share. That works out to a total of about 127,000 per share. That works out to a total of about 147,000 twin share. That works out to a total of about 14,700 twin share. This repurchase, as the report calls it, is part of a bigger plan. The company has a program to buy back up to $10 million worth of its stock. This deal with the CEO counts towards that total. Now, when a company buys back its own stock, it usually retires or cancels those shares, meaning they're taken out of circulation and won't be traded anymore. This can have a few effects, like potentially increasing the value of the remaining shares by reducing the total number outstanding. This particular deal with the CEO is flagged as an interested transaction because the CEO is a big player in the company president and director, and the amount of money involved is significant. It means the deal had to be reviewed very carefully. The report tells us that a special committee of the board, made up only of independent directors, looked at it and approved it. Then the whole board, with a majority of independent directors, also gave it the thumbs up. This is all to ensure that the deal is fair and not just a way for the CEO to cash out under special terms. Now, thinking about the company's stock itself, it's traded on the Nasdaq under the ticker SWAG. They also have warrants, which are like options that give people the right to buy the company's stock at a set price, in this case, $4.28,913.75 per share. The filing also notes that Stran Company Inc. is an emerging growth company. This is a designation for companies that have less than a certain amount of revenue. It means they have some flexibility with reporting rules, which is pretty common for newer or smaller companies. They've also chosen not to use an extended transition period for new accounting standards, meaning they're keeping up with the latest financial reporting rules. So the core of this filing is really about this specific transaction, the CEO buying back his own stock. While the report doesn't give us detailed financial tables or numbers on overall performance, it focuses on this specific agreement, which is considered a material definitive agreement. The filing also lists the exhibits. The most important one here is Exhibit 10.1, which is the actual stock purchase agreement. This document would contain all the nitty-gritty details of the deal between Stran Company and Andrew Shape. And finally, Exhibit 104 is the cover page interactive data file, basically a machine-readable version of the report's cover page information. Now, let's put on our investor hat and think about what this actually means. On the surface, a stock buyback by the CEO can be interpreted in a few ways. On one hand, it shows the CEO is willing to put money into the company, perhaps believing in its future. It also means he's reducing his personal stake in the company, which is something always worth noting. The fact that this transaction was scrutinized and approved by independent board members adds a layer of confidence that it was a fair deal. However, without the broader financial picture from this specific report, it's hard to say how this repurchase fits into the company's overall financial health or strategy. Is the company flush with cash and this is just good financial management, or are they trying to prop up the stock price or deal with other financial pressures? This 8K doesn't tell us that. It's more about the mechanics of a specific transaction. What we can say is that Stran Company Inc. is actively managing its stock, and the CEO is involved in these management decisions in a very direct way. The fact that it's an emerging growth company tells us they're likely still in a growth phase, and transactions like these are common as companies mature. In conclusion, this filing is definitely noteworthy because it involves the CEO and a stock repurchase. It's a positive signal that the company is transparent and following proper procedures for related party transactions. However, for a complete picture of Stran & Company's health, investors would need to look at their more comprehensive financial reports, like their quarterly 10Q or annual 10K, which would offer a much deeper dive into revenue, expenses, profits, and cash flow. This 8K is just a snapshot of one significant event. So what's your take on the CEO stock buyback? Does it make you more or less confident in Stran & Company? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up. It really helps the channel grow. And if you haven't already, make sure you subscribe and hit that notification bell so you don't miss our future deep dives into corporate filings. Also, don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching, and we'll see you in the next one.